Today, we're revealing an AI that reads 200 to 2,000 page SEC filings down to the footnotes and turns them into stock ratings vetted by Harvard and MIT, plus one under-the-radar AI supplier you probably missed. Are you team fundamentals or team FOMO? Comment fund or FOMO below. I'm Rebecca Kurzweil. This is Midday Bell. My guest is David from New Constructs. His team built a platform that ingests 10 Ks and 10 Qs and footnotes, reconstructs the economic earnings and the ROIC, and ranks every stock on quality plus valuation. It opens modeled portfolios and even live indices. We'll walk you through how to flag landmines in overhyped tech and how you can screen sectors, track most attractive versus most dangerous, and audit every number back to the source. Hello, David. I am so excited to meet you today and talk to you and find out exactly what it is that you do, what your investing expertise is, and all of your strategies, and hopefully find out some secrets from you and that we can share with our audience and that can help even myself trade better. So I'd love to just hear from you, like, who are you and what do you do and why should we be paying attention to what your strategies are today?
Hi, Rebecca. Yeah, thanks. I'm happy to be here. Excited to share what New Constructs is doing. It's a different firm. We're not a lot like a lot of the firms that are blasting out picks on a daily basis, hundreds of picks. We're not like Wall Street firms. I used to be on Wall Street. I was on Wall Street before, during, and after the tech bubble.
Yeah.
And so I saw during that time how the sausage was made in terms of how analysts at the firm I was at, Credit Suisse, were writing reports saying, oh, this is the greatest IPO ever. And then they would send an email to their friends saying, I can't believe anybody's dumb enough to invest in this. Yeah. That really happened.
Yeah.
And that's what inspired me to build a technology that would do the work that all the analysts are assumed to do on Wall Street, but don't do anymore.
Mm-hmm.
Because when I got to Wall Street, Rebecca, everybody would go through the filings, like the 10Ks and the 10Qs, the reports that Warren Buffett's always talking about.
Yeah.
And they would go through those meticulously and build up models and really understand the underlying economics of businesses, not just the accounting, the economics. And when the tech bubble came along, that really just got swept away because nobody wanted to talk about profits for IPOs where there were no profits.
Yeah, wasn't about that.
Yeah, exactly. We still see that happening some today.
And
so sure. we created an AI over the last 20 years that can go through all these filings, pull the data, and build models and stock ratings.
Okay, cool. I like that. That sounds really, really good. I really want to get into that. Is that something you want to share on your screen?
Yeah, I can share what it looks like. We can talk about a particular stock pick if you want. Okay. So, when I'm waking up every day, I'm logging into my system, and I'm seeing what the technology that we've designed over the last 20 years is showing us about the best and the worst stocks in the entire market.
Wow. Okay. Amazing.
Yeah. So what that means is that when we come into work every day here at New Constructs, you can type in a ticker and get an answer. So if you wanted to know what we thought about, let's say a stock like Beyond Meat, well, in a matter of seconds, here you go. Red is bad, green is good, right? And Beyond Meat is, one we wrote about since the company IPO'd. I mean, you can actually go and see our history on this stock.
I remember that. It was a very hot stock at the time.
Yeah, it was super hot IPO. And I think we wrote this out. Our pre-IPO coverage for Beyond Meat was, April 2019. But for stocks we like, you're going to see a lot more green. So here's Photronics. This is a stock that we've had on our focus list for a while, and one that we've written about recently. You can see our most recent report would be here. But what this shows you is a breakdown on the quality of earnings and the valuation of the stock. What I haven't mentioned is that we have live traded indices on Bloomberg. So if you wanted to see how our very attractive stocks index performed, you could go in and you could say, let's see, I'll give you the ticker for this index is here. And you can see there's a very attractive stocks index on Bloomberg right now that you can track the trading from. You have to be logged in to do that. And I think their website's been having some problems recently because normally it just pops up here. But the idea is there's real live trading strategies based on our research. We are not giving investment advice. We are looking to help people understand how the market works and provide research. We've got a most attractive stocks list, our most dangerous stocks list. We got a focus list. And this stock here, Photronics, is on our focus list. And you can see the quality of earnings and the valuation are both good. That's what it takes to get an attractive rating. So you can see we're looking here at the economic earnings versus the reported earnings. And so this is a comparison of what the company tells you it's doing versus what the real underlying economics of the business are telling you it's doing. The next metric is return on invested capital. And that's Warren Buffett's favorite metric. That's how much cash flow the business generates relative to how much capital's gone into it over its life.
Absolutely. I think there's a lot of sentiment, especially around maybe tech stocks, is that there could be a lot of weakness coming. I don't know. What are your thoughts on that?
For sure, on certain tech stocks, 1,000%. And for example, we have a screening tool that allows our clients to come in and say, okay, listen, I want to look for the best stocks in the tech sector. I'm not going to give them all away right here, but I'm going to show you how very quickly you can screen an entire sector for the worst stocks. Obviously, if you went to very attractive, you get the best stocks, but I'm not here to give everything away for free, right? But the point is, we built this AI that can go through and understand the truth about profitability and valuation across thousands of stocks. So when we pick our favorite stocks, it's not based on, a hunch or, the little bit of work we might have done in one sector. It's based on looking at the entire market. So if you were to go into and want to understand the details behind any of the adjustments or the numbers in our models, we'll show you that. We'll show you the balance sheet adjustments from the footnotes. And we do this for every filing, for every model in the system. We can show you the original cash flow statement, the income statement, all the data, all the adjustments, always there.
And so do you recommend comparing this data against anything like charts or, I don't know, what would your step process be personally? You'll look in here and see the stock and then you're just fully trusting this, or are you having other kind of trading or investing methodology to then accompany this?
That's a great idea. We have our own charts, but I think you're talking about technical charts, right? So
is there a second step that you would maybe recommend? Or
I think it's a great idea for investors, especially if they're handy with technicals, to add technicals as an overlay on top of new constructs. There's no reason not to. It's an additional signal. It can really help you with entry and exit. It's not something I do so much, Rebecca, because we're really focused on getting the fundamentals right. That's hard enough. Going through all these filings, they're 200 to 2,000 pages long, pulling out all the things that companies don't want you to see in order to get to the truth.
Absolutely.
That's a full-time job. And teaching a machine to do that is a full-time job. But there's no reason why sentiment or technicals or insider trading trends couldn't be overlaid with our research. We think it's a great idea to combine multiple signals.
And what about index, like SPY or Dow or anything that's
when you look at the SPY, it's relatively attractive. You can see here we have ratings on all the ETFs and mutual funds, and the ratings on the ETFs and mutual funds are a little different because they're put on a scale. They're not graded on an absolute level like the stocks are. So the stock ratings are just based on the stock's numbers. On the ETFs and mutual funds, we divide the universe. The top 10% of the universe gets a very attractive rating, and then the 20% after that gets attractive. 40% in the middle is neutral. The bottom 20% are unattractive. The bottom 10% are very unattractive. So that's why SPY is going to get an attractive rating, even though you got a lot of red over here, which is showing that the index is expensive.
It is expensive.
But compared to other ETFs and mutual funds, it's not that expensive, really.
Absolutely. So is this looking at just what exchanges are and what countries are we looking at here too? Can we look at Canada?
We cover pretty much all U.S. exchange traded stocks, ETFs, and mutual funds.
Okay.
Our technology is now ready really to scale like that. And we're excited to bring these insights to all stocks globally. But right now we cover, in terms of market cap, we cover around 80% of the world, I think, when you take into account the big ADRs that we cover. For the U.S. stock market, we cover like in the high 90% because we cover everything in the sort of the top 1,500 stocks. We cover 3,300 stocks in total.
Right.
So we're really like, in terms of the ones that matter, but we cover all of those. The reason we cover a lot of little stocks is because our client base has primarily been institutional. And our clients that manage hundreds of billions of dollars, like they can't even think about these smaller stocks. So we focus on the bigger U.S. stocks because that's where the majority of assets are in the world.
Of course. But like OTC would be available on it all the way to NASDAQ, or?
I don't think we cover a lot of OTC stocks.
Yeah. Fair enough.
We're going to cover stocks that people can put a meaningful amount of money in.
Yeah.
We used to run a hedge fund ourselves, and before we ran the hedge fund, we really focused on covering the Russell 3000. And when we started running a hedge fund, it was a small fund. It was only like 10 or 20 million bucks.
Yeah.
But we couldn't invest in like 1,000 or a third of the Russell 3000 because so many of those stocks are so small and they had such little liquidity that even our tiny little fund couldn't really get into those stocks without moving the stock price. Right. So that's when I realized, well, wait a second, we're chasing the wrong goal here. Let's cover the largest, most actively traded stocks that our institutional clients and we want to focus on.
Yeah.
And that's where we focus. So, and we're not always into the penny stocks. It's just a lot of volatility there. It's a little bit nutty, not so much based on fundamentals.
Of course. This is definitely very, very fascinating. So if I have an account on here, then I can just you basically start your search based on the sector, or it will just kind of tell you the most attractive stocks just in general.
You can do whatever you want. You can track portfolios. So, you can have a set of stocks that you have in your system. And so, for example, like here's some of the dividend aristocrats. You can copy and paste a bunch of tickers and immediately get a read on all of those stocks. And you can track multiple portfolios. So like here's our ideas dinner ETF. This is all good stocks because, we're only talking about good stocks in our ideas dinner. Here's our zombie stock list.
Yeah.
There's a lot of bad stocks. And then, of course, if you want to screen, I showed you before how our screener worked, right? So you can go in and screen for all the best stocks, for example, in the industrial sector. And so that'll give you a list there. If you wanted to further refine it by, hey, I want stocks with returns on capital greater than 10%. I want a dividend yield greater than 2%. Bam, there's the list. And that can, of course, be added into a portfolio that you could call. So here we go with Rebecca's picks.
I love it.
Fan of industrials. And now you can track, you can log in, you can see the equity rating, you can see the credit rating as well. You can get PDF reports that will download directly to the system. And mainly get updates when things change and when ratings change, you'll be alerted.
I've appreciated your time. And I don't know if you have any final last words. Would love to hear them. Otherwise, it was great to meet you. And
last words are diligence matters. We think it's worth doing your homework. New Constructs has created a system for helping people do their homework. And I hope that investors find it helpful.
Yeah, I love it. Thank you so much. Have a great day, David. And I look forward to connecting with you again.
You too. Thanks, Rebecca.
Bye. Your turn. Post one ticker you want us to run through New Constructs. I'll pin it in a few and we'll break them down in a follow-up. If this has helped, like, subscribe, and share. Big thanks to David from New Constructs. I'm Rebecca Kurzweil, and this is Midday Bell.